Good afternoon. Ira Epstein with your SPDR ETF video wrap-up, and this is for Tuesday, and we're now at the 18th of February, 2020, just getting on to 4:50 p.m. Central Time. So we walk in today to news yesterday that Apple had said that its supply chain disruption will impact first quarter earnings, blah, blah. Other companies are going to say the same. In fact, don't be surprised if you get talk like that into the second quarter as well, because we don't understand yet if coronavirus, the COVID-19 as it's now formally called, is going to spread elsewhere at an aggressive pace, or if what we're seeing, this contact and controlling it outside of China, stays very much under control. And that's what I would say it is so far. That doesn't mean it stays that way. Within China, a lot depends who you want to believe. If you believe the Chinese government, the situation, the lower numbers coming out of Wuhan and its province, that is a good sign. Now, I think people are still scared and really scared in Beijing and other cities, and getting workers back in the factories, well, that's going to be a major task that the government's going to have to step up to get done, because we're hearing from corporations that while their doors have been open for days, the workers aren't showing up. So you're going to have to be able to get them back into those places. That's going to be the Chinese magic. Remember, it's a lot different than living in our democracy. It's a communist country, and you got to pull the line, if you will, and I think that's what we're looking to see. Of course, people are scared with their lives. Today, China also declared that there's 669 items they're removing or reducing tariffs on, and that'll take place March 2nd. We saw the wheat market jump today. I'm wondering if that had anything to do with it. But as we look at the tech sector, it didn't act bad. I mean, if you didn't know that the market in the early morning was down so sharply, you'd say, well, that doesn't look very bad. The market's looking all right there. The pattern's still bullish. Today's low at 101.03 didn't take out a previous low of 182, so we've still got the pattern of higher lows, and certainly have had higher highs. When we take a look at moving averages, the market is still over the 18-day average, which is over the 100, which is over the 200. We have a bullish setup. On the first break to that 18-day average, I wouldn't be surprised to see support if and when it happens. So where's the resistance since it's not breaking? It's a bit higher. See the black dashed line? Notice how that's offered resistance each time it's been hit. I see no reason for that to stop. It's called a Bollinger Band. 95% of the time, the market will trade within the top and the bottom lines of the Bollinger Bands, the black dashed ones here. The algorithm obviously changes tick by tick during the day, but not radical from once it reopens on the day. Typically not at all. When you look at XLK and the slow stochastic, you've got a locked-in momentum. So you have a market in an uptrend. The bias is up since it's over the 18-day average. It's seeing some profit taking. And if the market clears Friday's highs, maybe we get back to the upper Bollinger Band. If the market takes out 100.82, you break the pattern of higher highs, higher lows. But that's not the ruling factor. The slow stochastics on the hierarchy are when they're embedded or locked in with both the red and the blue lines going sideways over 80 for several days in a row or more. When I come to the industrial sector, I'm concerned right here. Notice how we're starting to turn down. When we reopen, is this number going to get under 80? So I'd be a little cautious right here. If it does, it's a sign that upward momentum is lost or being lost, and price might return to that 18-day average. This chart is not as friendly as we just saw in the tech spider. On the energy sector, you've run into the brick wall at what I call the line in the sand. You've heard me say this many times for a regular viewer. Moving average people, chartists like me, they like to see a neutral number. Now, it could be an 18, a 19, a 20, whatever the average that you're comfortable with. I know what I use because I've used them for decades, and I'm comfortable with this. So that was where I'm expecting the first resistance after a prolonged decline. That does not mean we're in an uptrend. Number one, you've got to close over the 18-day average to turn the bias up. You've already got the pattern of higher lows and higher highs but you've used that momentum and now you're sort of drifting right here. We're going to start getting tomorrow, I believe it is tomorrow, we're going to get the API number, and on Thursday the EIA numbers. We'll see if they have any impact on the market. Remember, the market's still looking at the Chinese variable and wondering, no matter what we show in stocks, what does that mean for the market? In the NASDAQ, a pretty powerful day. They tried breaking it, took the market down to 233.25, turned itself around, closed near the high. It's keeping the pattern of higher lows, higher highs with an embedded reading. A warning sign would be taking out today's low, because it's an outside day up, and that often leads to price and the 18-day average coming together. But it's not the top hierarchy. The embedded reading is. So while I look at that, this rules my day when I've got the embedded reading. When I look at the emerging markets, well, they're under pressure via China. They're emerging markets, folks. They're not the, if you will, the well-established markets. That's why they're called emerging. You've got a higher high, lower low pattern. You've been fighting. And you've been fighting since the beginning of the month at that 18-day average of closes. The bias is down, momentum's turning down, but you don't have the trend down because you got the higher high and lower low. Look for more of a battleground there. What if the market just lets go? Well, if it does, I'm going to look for support between the 100-day in green and the lower Bollinger Band. If it goes up, I still see resistance right here. But if you were to get up and over the close of, the 18-day average of 68.95 and not take out today's lows, I could begin to make an argument for higher lows, higher highs. You got to wait and see the variable. There's no play that I see just yet. In GLD, one of the things that I preach here, and that's probably the right word for it, is the first time you challenge an upper and lower Bollinger Band, I think pros are taking money off the table. But there's another thing I preach with it. From sideways strong action come breakouts, and inevitably you get overbought or oversold when you go into the sideways action. Is this a real breakout to the upside? Well, you need another day of staying over that Bollinger Band to convince me, but the trend is up. Certainly overbought. I think pros took some money off the table today, and we'll see if there's follow-through. Between the upper Bollinger Band and the 18-day average is where I see support in the market. It is overbought. In the gold miners, where do I think resistance is going to come in? Right at that upper Bollinger Band. So what we did today, and today was important, we had higher lows, higher highs, but we had closed still under that 18-day average. If you take out 28.59, your bet is it going to stay over at the 28.51 level to keep the bias to the upside? As you can see, the market opens right against that number. Today, do I have the open on here? Yeah, 28.59 was the exact opening. Poked through it, back down, and just sprung to the upside. I'm looking for the Bollinger Band to offer the resistance. TLT, you're already in overbought area, so I'd be nervous between here and that upper Bollinger Band that you may run out of some momentum to the upside. Certainly the trend is up. You've got the higher lows, higher highs, but the overbought condition is a bit worrisome, not bearish. A worrisome event, and I'll repeat what I said. When you hit the Bollinger Band for the first time, it would not surprise me, and that's what I teach, that I think pros take some money off the table if they're short. I'm at long in that case. In FXE, this reminds me of a coffee chart. It's just a one-sided chart. It gives you no opportunity in. You've got the embedded reading. It's riding the lower Bollinger Band. What is a reaction to the upside? That's the difficulty in playing it now. We know we're resistance. It's back at the 18-day average, but to get there, you'd have to get through 103.42, the last rally high. I'm bearish. Don't know how to get you involved in that. Last pot. Yep, POTX. Still a bear chart. You've got lower highs, lower lows, but you've lost the bearish momentum. Do you see this? You had it here on Friday, you lost it today. To me, that is a warning sign. Probably overstayed the short side. The market could be ready to go back to the 18-day average of closes. To me, big time warning. Can it re-embed tomorrow? Yes, you have to have a good drop to get that number back under 20, but it's your warning sign that downside momentum maybe coming to an end or has come to an end. I'd be very, very cautious here, being bearish charts when they lose an embedded reading. I want to remind you what I do. In the mornings, I put out morning futures update. In the afternoon, and I'm talking for my subscribers, not this free stuff that I'm putting out on YouTube, my morning subscriber for the futures, and at 4 p.m. I typically have recorded for you a SPDR ETF video with way more charts than this. Basically, I'm covering everything you see behind me and more. I've got a lot of charts in there. And when I'm covering them, I'm giving you buy here, sell there, do this exactly. Not just talking the generalities of what I think the pros are doing, but what I think you should do. What's the purpose of it? I don't want to be your trade advisor. I want to be your chart mentor. This is what I'm seeing. Maybe that fits in for you. If you'd like to see it, you can get a free trial to it, no credit card, none of that required. Go to our website at www.iraepstein.com. Under free offers on the right-hand side, you're going to see the SPDR ETF video. Sign up for it, and we'll get it out to you. I'm Ira Epstein. You have a good day, and I'll see you all tomorrow.